Good morning, good afternoon, good evening, all over the world. Dobson 777A here. Kind of late tonight, so I'm going to try to hold it together, even though this is kind of late for me to be starting a video, but I wanted to get one in on a Friday night. And we got a lot of charts here in the back. So I've got my updated pitchfork chart for gold to show whether we're outside the channel. I've got some inflation adjusted gold and silver prices that I found an article on, so I thought this was kind of interesting. And I'll even go in and look at what our portfolios are doing and a few more of my ideas about the portfolio this year. So anyways, let's get started. So this was an article that was posted on Bullion Star, and this was a couple weeks ago. So this is really updated information. I've seen a lot of people doing videos talking about, oh my God, if silver was actually, up to inflation adjusted values, it would be $700 or something. But, realistically, you think about even like oil. Oil isn't tied directly to CPI or inflation, and neither is silver. Part of what happens is, remember, silver was demonetized back in the 60s. Essentially, they took it out of the coinage, and all of those coins disappeared out of circulation. They're collectibles now. They're actually out there where you can purchase them, but all the bullion and everything are not in circulation. So therefore, a lot of the price driving for say comparing against CPI and everything is irrelevant. You can't go back in time and compare to see what it would be, at least going back, before the 70s or something. You have to look at it, maybe just since that time only. So I want to keep that in perspective. Since it was demonetized, a whole bunch of silver just really wasn't being used anymore for money specifically. It's just not in the coinage anymore. But I'm not going to read this whole article. What I'm going to do is I'm going to go through and just look at a few charts. So, I've talked about shadow stats before. We have, the consumer price index versus shadow stats, and the government's created this big fraud on inflation, and it's because they just don't want to pay their bills. They don't want to pay, the appropriate amount for retirement folks, with Social Security and other things. So the cost increases are minimized because they take out key things that, clearly we don't use energy, so therefore you don't have to have energy in inflation, right? That's just tongue-in-cheek, I'm telling you, but that's what they did. And they said, you don't really need to put steak in there because people can eat chicken. So anyways, they've done some games to hide the real inflation. And so if you were expecting to live a certain way, you're not going to be able to, at least if you try to live and die on the government dole. So think about that. So anyways, when we look at, this is gold versus CPI, they're trying to show what the approximate price would be, and based on the CPI adjustment, the all-time real high of the US dollar gold price was $3,045 at this point right here. That's tied to CPI, and they're trying to show that gold is actually being priced by CPI right now. So if we go back and look at, here's another one. I want to get to so this was a 1980 high of 140 for silver at CPI, but let's get to the shadow stats one because those were the most interesting. All right, so this is using shadow stats. I wonder what the G stands for. I forget what the SGS alternate is, but in any event, they're saying that back here at this point in 1980, this would have been $20,000 for gold. And so, where would we be today? And this is what I've been trying to tell you, folks. I believe we're going to do just like this from 1970 to 1980, what happened to gold. And so we're potentially going to see something similar. And this is, Jim Rickards is calling out a number that's going to be $15,000 to $20,000, and you can see that here. But again, because we've been demonetized, you can see that, the price has been trending down for a long time, and you get these periodic peaks. And this is another thing that I talk about, that you've got to consider this a trade. We're going to take a large portion and convert to something that's undervalued, because at some point you can see it's going to be overvalued. You got to get out, get into something else, and then play that for 10 plus years and then move into the other thing. So that's the way it's going to work. Let's see what silver is. So silver 1980 high, if you're using the Shadow Stats real CPI, it would be something like $1,000. So gold would be like 20,000 and silver would be 1,000. So that gets you to like 20 to 1. And a lot of people will tell you what the historical average is, going all the way back to Roman times and everything. But guess what? Back then, silver was money. Silver's not money now. We really have fiat currencies. And all fiat currencies are debased. There is nothing tied to gold anywhere, nothing tied to silver. So you can't use any of these previous metrics. And that's what everybody wants to do. I mean, I would love it if, and right now, you know, this Luke Groman is talking about that U.S. Mint bullion sales are up 700%. I think this is year-to-year comparison, but that's a big number. And we can see that Bitcoin has kind of exploded up, and yet we don't see gold and silver doing the same. I did see an article the other day about India talking about taking action against Bitcoin, and you will probably see other countries doing the same thing. And that's the risk you have. They don't want competition for their currency. So don't be surprised. I've told you this over and over again. These governments are going to create their own electronic currency, which we already pretty much have in the U.S. What do you think your debit card and credit cards and everything, all it's electronic funny money. So eventually they're going to have something they're going to point you to, could be FedCoin or whatever. That's what it's going to be. So let's go look at the charts, but I'll put a link for this article so you can read it, but don't get snookered by the fact that you can't really compare to the past, and you can't expect that we're going to go back to sound money. Nobody wants to carry change in their pocket. They don't want to make change. They just want it all done electronically. With these debit cards and stuff. So I doubt we're going to go backwards unless, you know, we have a big CME and wipes out electrical grid. So don't count on us going to real money. I would love it if they did, but don't count on it. All right, so here is our gold pitchfork chart, and I decided to back it up to 2011 because I want to make a point. But you can see this was our previous high for gold. It was about 1898, and you can see we peaked above this July last year, and then we've been coming down. And I wanted to point out this 50-week moving average has been a point of a purchasing point for you. And I wanted you to see, you know, we hit here, and this was a major buy point here. Now we've recently hit here, and we broke through it a little bit. Are we going to break out of this channel, or are we going to now bounce up and move up? That's what I want to know. We don't know yet. I think it's too early to rotate into real estate or anything else because we don't have the short sales and foreclosures. They just, I think they approved the stimulus package, but it may be several weeks. So I don't know yet when that's coming out. I'm seeing mixed messages, but I think we're going to get $1,400 checks. And if that happens, you probably should see this stuff bounce up here. So anyways, that's gold. Platinum. Platinum is reaching back to around it looks like it's trying to get past the 2016 high. You can see how far this has run up. It's actually broke out of the previous range that was around 1,000. We're now at 1120. So platinum is looking great, but it's got a long ways to go to get all the way back to 2011. So I wanted you to be aware of that. But yet gold's already passed it once, and it's about ready. We'll see if it breaks out and goes past that previous high here and stays above it. Now silver. Silver is currently at 26,897, and you can see that, let's bring it down to that level roughly around in this area. You can see it's got a long ways to go because it's got to get all the way up to $48 or so. So we're still 20 bucks off. Almost have to double the price for silver to get to all-time highs. At least, you know, this recent history here, it's got a long ways to go. Hard to get excited when that. Now, I was listening to one of the, it might have been Macro Voices, whatever, but I wanted to tell you a story because I thought it was really interesting. They had commented on one of their customers had bought rhodium at $1,000 an ounce, I think it was, and rhodium is like $20,000 an ounce. So here's a chart. I went and looked it up, and in order to get it around $1,000, you would have had to buy in 2017. Yep, somewhere around here, and it's currently at $21,000. So the guy had, remember we talked about the gold silver ratio where you end up swapping like your silver for gold. Well, this guy swapped his rhodium 1 ounce that he had, and yeah, here it is right here. Swapped his 1 ounce of rhodium and got 10 ounces of gold. Look, I'm going to tell you right now, that is a fantastic deal right there. And, you know, we might see an opportunity here, something similar, and we just gotta play it. But who would have thought this thing would have exploded? But here's another example of you can play commodities, play ratios, and go get your gold. I mean, that's the whole idea. If you can afford the premium changeover, I think that's a pretty cool idea. So this guy did it. So what did you think about that? I wanted to talk about densities because I thought this was interesting. Here's a quick and dirty example of density. So you can see starting at the bottom, honey is more dense than corn syrup, and corn syrup is more dense than dish soap. Dish soap is denser than water, and vegetable oil is less dense than water. So if you go over to the other side, you'll see I have platinum at the bottom. That's more dense than gold. And then you have rhodium, and then you have silver, and then you have titanium, very light at the top. So I thought that would give you an example before we go into the next tables. I found a chart where we can look at gold is 19, platinum is 21.45. So you can see platinum's actually denser. It's harder to stamp coins and stuff because of that. Silver is like half the density here, 10.53. Just like rhodium is very, very low density. So I wanted you to put that in perspective versus like copper, nickel, cobalt. So a lot of people, they think just because copper is cheaper that maybe they should be trying to invest in that. And there's a dollar density as well. With gold at $2,000 an ounce, you are actually being able to store a lot more in a single coin and to make it transportable versus like silver. And that's why we have this 75 to 1 or whatever the current ratio is. So there's actually a weight density, but there's also a dollar density that you need to consider. And I'm still expecting that you should consider platinum equal to gold as far as dollar density. Right now you're buying gold at half price in platinum, roughly. It was half price when I started buying it, but now that the gap is closing, because if you try to buy platinum right now, it's close to like $1,400 because of the premium. So the gap is closing, and for over a year I've been suggesting we need to get in that. But anyways, that's still something to consider. I was also looking at the different carats of gold and the density range that occurs on that, and you can see how it rolls off pretty quickly. I find it very interesting. It's very difficult in the stores to find 18 karat even anymore. Most stuff is 14 karat because the price is getting so high. They're just not doing the 18, 20 karat. You have to actually go to specialty stores online and get it. So I thought you might find that interesting, but it tells, how much of the alloyed metal is put in, when you move in this carat range. All right, so let's look at the markets today. We had the S&P 500 and NASDAQ, Dow Jones were all up slightly. Canada, Chile were also up about the same. Mexico was even. Eurozone, 0.5%. France up almost 1%. South Africa was up 1%. China was even. All these guys look up. We're a little bit over 1 to 1.5%. Gold and silver ended up with a slightly up day today. So from 1798 to 1814 for gold, and then silver was 2635 to to 26.92, so about 0.6 cents. So when we look at our ETF gold, we can see it was up 1%. Platinum was up 2.67. Silver was up 1.92. And res is crawling up again. Res is actually doing nearly as well as platinum this year, year to date. Gold is down about 5% year to date, still lagging. When we go to our ETF miners, GDX 2.28, GDXJ 1.92. I mean, this is a really good day, 2.28 total for the portfolio. And you can see the junior silver miners won the day, 3%. All right, that's it for the report. I hope everybody's treating you well. I hope you're doing well. Do the best you can. God bless. All right, go potty. We gonna go bye-bye? Are we gonna go bye-bye? Everybody go bye-bye. We gonna go bye-bye? Yeah, all right. You going to get in the car? We're not quite ready. I'm almost ready. You almost ready? Okay.